Okay, guys, welcome back to my channel. Today I'm going to be teaching how to utilize fair value gaps with EMAs. Okay, we're going to do a short on the point lesson on this, but there is some more depth. Yeah, because what I trade Elliott Wave combined with the market maker method. Both of them help me with each one. The market maker method helps me, like for example, we've got this break and close below the 50 MA, okay, after an M formation. That helps me know that we're bearish, okay. Elliott Waves though, if I haven't done a count on this chart, I just literally saw an opportunity there and I took it. Elliott Wave suggests this is a fourth wave, okay, potentially, if I haven't done the count properly, okay. So that already tells me there's a potential that from somewhere around here, we can go and make another high. That's just a quick example. So, I know that, yes, we're bearish. I know that, like, I took the trade. That was my position. Okay. But where to, in it? Yeah. Market maker method doesn't really give you that. They'll give you risk to rewards that you can take and stuff like that. Okay, and then the Elliott wave will tell me that, okay, if this is a fourth wave, it'll come down to the fourth wave of a lower degree, assuming that's the fourth wave. We haven't done the count. All right, but with these fair value gaps, yeah, there's the thing where people aren't sure which fair value gap's going to hold, which fair or imbalance is going to hold, or even order blocks. And the EMAs can certainly help you out with that. Elliott Wave can help you out with that, and the market maker method can help you out with that. So let's take this chart for example. Okay, I'm gonna find another chart because we're at the top here, and it'll make sense soon. But just briefly, while we are on this chart, I have a fair value gap here. Okay, I also have a point that if we broke it, yeah, it would be more bearish. Okay, if we broke and closed below there. Okay, as it's the prior fourth wave, as it's the last impulse, 1, 2, 3, 4, 5 to the upside. Breaking that would be bearish. Okay, and then at that point we'd be looking for price to come back to the 50 MA, and that would line up with a fair value gap. So if I just now, okay, draw the potential fair value gap that's here. In fact, we can go to a smaller time frame and there'll be a fair value gap. Okay, so this is our current fair value gap. Okay, this one up here. Okay, this is a smaller fair value gap on a smaller time frame. Okay, in fact, yeah, this actually could be a good lesson, right? So here, for me, market maker method. Let's go to the 15-minute time frame. Okay, making sure I was recording. We on the market maker method, okay, we see the shoulder, head, shoulder, we've seen the drop, we've seen the close below the 50 MA, and also price went below this white line, the 50 static. Okay, so we then want to see price return to the 50 EMA on the 15-minute time frame. Okay, even on the 50 EMA on the 1 hour time frame is better. Yeah, that's up here, and that's where an inverted fair value gap was. Okay, we don't need that right now. So there we go. Was it a 30 or a 15-minute fair value gap? 30-minute fair value gap. Okay, right here, and it goes on that width there. 30-minute fair value gap over here. Okay, on the 15-minute, on the hour, you can see the 50 EMAs here. It's lining up with it. Okay, as price is coming up, the 50 EMA is going down because price is below. EMA is moving average of price, and the exponential moving average of price. That's why the E's in front, because it keeps up with more recent price action than the normal EMA, the normal MA. The MA is slightly slower. Okay, so I know as price is making its way up to the 50 MA, 50 MA is also coming down. Okay, and what we like to see also, we don't just sell at the 50 MA. Let's say the 50 MA travels like this. Okay, and then we've got price coming up. Okay, we want to see price grab liquidity. Yeah, if there's no liquidity in the leg, as you can see here, so actually one, if there's no liquidity in the leg, we could nip this. Okay, what we could also do is create a high, push lower, grab the high, and then break that low. Okay, that's the type of price action that we want to see at the 50 EMA to take the trade, because it's way more confirmed. Okay, you can just put your, because if you've got confirmation that we're going lower, whereas like for example Elliott Wave, okay, prior fourth wave, whatever your reasons are, okay, we could have already been in a bearish structure. Right now we was in a bullish structure, okay. But if you was already in a bearish structure, you could just it's not what I do, but you could just put your sell stop there, TP there, and that would offer you a great risk to reward anyway. You need to know where you need to know where you're getting out, okay? So that would be the stop loss, okay? And then if we was to come into this fair value gap, okay, just about 50% of it, you've got a 1 to 1.6, which isn't great, actually. It's not great. But obviously, when you're dealing with price at the time, when price is moving, you're able to, like, say, for example, this manipulation here. Say we manipulated, in fact, let's put that back. We manipulated here and we went down a bulk structure. Your stop would actually, your entry would be upon that breaker structure, and your stop would actually be at that high there. Okay, same target. Let's pull up a bit. Okay, you're looking at 1 to 6s and things like that, taking it safely, yeah, with the tight stop loss. So I want to show you more of exactly what I mean when I say these EMAs help you out, because this is something, it hasn't happened yet. Okay, so let's go on to, let's see what's their gold. Okay, cool. Oh, look at where gold is on the 1 hour time frame. Okay, now currently I expect higher for gold. Before I am looking for a short, yeah, by the way. As you can see from my Elliott Wave count, you don't need to know Elliott Wave to get a lot from this video, but I am going to be referencing it because it's helpful, okay? I've got my A wave here, potentially a 1, but to me it's an A. B wave here, okay? And then we're looking for that C wave, yeah, to come down, and it lines up with this fair value gap, a higher time frame fair value gap. And from that moment, I'm looking for price to go higher. So we've got this. This was also a 5-wave structure. This is why I know this to me is corrective, looking for more corrective. But it could be impulsive, corrective, looking for more impulsive. It doesn't make a difference in this scenario because we're still looking for price to go down. But currently, okay, so to me, this would be another A wave. We're looking for a B and then a C to go lower. This is our fair value gap. I believe it's a 4-hour fair value gap. It's a 4-hour, 3-hour, and a 4-hour fair value gap. Okay, this is for the 4-hour. All right. So high interest, powerful area for the market to get to, and then we can see what happens. All right. So we are on the 15. Let's go to the hour again. Right, you've seen, okay, market maker method. All right, you get your M formation here, or you can call it shoulder, head, shoulder in this scenario. A breaker structure, 13 crosses the 50, we're bearish. Next thing you want to do is take the sell at the 50 EMA. Sorry about this, 1 second, let me mute my phone. The next thing you want to do is take a sell at the 50 EMA. Clear this off. Okay, now like I said, you could just take it at the 50 EMA, okay, and put your stop, well, for your stop would be here in this scenario, okay, or some might put it here, but I wouldn't, because look, the fair value gap is here. We've got equal highs here, that's liquidity. We've got the supply zone that's responsible for this breaker structure, okay. Price even came down and took out this little bit of demand here. All right, so if I remove all of this stuff, so you can see it clearly. Very, very simple way in which you can enter the market safely, okay? And you'll be using the confluences of more than one school of thought by doing this, okay? Now, Price has come up. It hasn't grabbed liquidity above the 50 EMA. So like I said, just not long ago, we want to see a move like that. Then we go grab the high, break this low. There's your sell, stop loss there. That's how we approach the market at the 50 EMA, okay? So if you was to use Elliott Wave, you could see this is an A wave, 535, looking for a 3, and then another 535 into here to take it down. Yeah, and that would also be about a 1-to-1. So say B and ends up, I don't know, let's say that is the B wave, it ends up somewhere there. We'd expect this to end at 1-to-1. You don't need to know all of this Elliott Wave if you don't know Elliott Wave. If you do, it will help you. Okay, it lines up with the fair value gap as well. Okay, so an A wave and a C wave are usually equal in length. Yeah, so if this is my A and this is my B, which might not be finished, we might do a bit of this. Okay, then my C wave from wherever the B wave ends, I'll put this. Okay, would end around the 1-to-1. Yeah, 1618 would be the maximum, but that is also rare. It's usually 1-to-1 to 1-to-236. Okay, and it can fall just short of it. This is our fair value gap. This is our 50 EMA. And so what I'm looking for right now is for price to run this 50 EMA, take the fair value gap, give me some signs of distribution, or I could just look under here for bearish divergence. Okay, and then I usually get in before that breaker structure, but I would advise wait for that breaker structure. Okay, so this is the setup for short. We would require price to come in here, show size distribution, and go lower. On this occasion, okay, on the 1 hour time frame, we don't have the EMA confluence over here. We go to the 15-minute time frame, and again, we don't. So this is a 4-hour play. It's a 4-hour fair value gap as well. The 50 EMA, as you can see, I marked it with this blue line. So in this scenario, I'm expecting price to potentially, once it's come up here, drop down, and on the 4-hour time frame, this move up will be a wick, okay? Majority, if not all of it. And then we'd expect the close below this blue line, which is representing the 50 EMA, okay? I see this often. I'm anticipating this on gold right now. It's the 18th of November, and I will be participating in that trade should, everything go well. I'm hoping this will be up here for around 6 o'clock, because if it's not, I don't think we'll get this trade by before Asian session basically kicks in. Yeah, this they'll start trapping traders basically. 1 hour time frame. There's a 4-hour fair value gap. We go to the 1 hour time frame. Okay, you can see the 50 EMA. You see a trapping on the 50 EMA once that happens. So this would be the initial push above the 50 EMA. You can see I've got my alert set there. That'll be the initial push above the 50 EMA. It didn't grab liquidity to the left. Okay, you could say this, but this structure started here, ends here. This is in the middle. We don't count that as a break structure. We want to take something out to the left. Okay, we've got these highs here and this fair value gap. We've got our 50 EMA here. Okay, again, this is another example where the 50 EMA is not actually in our point of interest, but we get a push up here and a close below the 50 EMA. We know that's our trade down. Okay, I'm actually looking for this to happen on silver as well. Okay, we're on the 1 hour time frame, and if I go to the 15-minute time frame, we have the 200 right there where the 50 EMA is. Yeah, so same thing at the same time, as you can see, we've got this channel over here, and the top half serves as a trend line. Okay, so this will also be a manipulation of the trend line into the fair value gap. I can tell that we are already diverging. We've got signs of divergence. Yeah, You could just use the RSI or MACD for this. I use the TDI because it has other confluences with the market maker method. But the likelihood of this high, once it's taken, this not being above this high or this high, yeah, is high because I see this often, yeah. So if it does happen and we take it at the same time, it cannot diverge here. It can take it out and then cause a divergence after. In my experience, will come up here. I will look for this divergence here. Okay, I will look for that inside the fair value gap to give me the signs that we're going to go lower. All right, but I have missed out some things here. Sorry. All right. As you can see, before we even got here, we had a fair value gap right here. Yeah, there's a fair value gap over there. Okay, how would I have known not to take this fair value gap? I mean, we did this and we pushed down. Okay, I've only got 5 waves up from the low. Elliott Wave tells me for every 5, there needs to be another 5. Yeah, we've got 1, 2, 3, 4, 5. This would be a 3-way move down. Okay, so I know I'm expecting another 5. Now this may look like a 5, but experience tells me it's 1, 2. You know, it's not a completed thing. So we could have 5, 3, and 5 over here. But I don't want to do too much Elliott Wave. All right, but the bottom line is, okay, you can always look for the fair value gap to be reached with bearish divergence. Okay, you'll note the EMAs. Now the 50 EMA is here on the 50, on the 15 is being used as support currently, and the 200 and the 800 are here. The trend line is here, so we want to grab liquidity. This is how we grab liquidity above the 50 EMA. This one's going to be above the 200 as well. We grab liquidity, and once we've done that, we would be in a fair value gap. So looking for bearish divergence or a breaker structure at that point will give you your trade to the downside, to continue going to the downside. Okay, I'm going to go to, let's go to like the Euro USD or audusd. Just wanted to get to a forex pair. We'll jump onto the 4-hour time frame. Okay, and we'll just let's remove the EMAs for now. Okay, got a couple fair value gaps, a couple inverted fair value gaps. We're just gonna remove them. This is a fair value gap. Okay, where's the point of interest here? We got this as our channel. Okay, sorry, before I even get into all of that, because I have a bearish bias on here. Okay, due to the Elliott Wave count, WXY. Yep, there we go. I'm looking for this into yet another fair value gap down here. Okay, we could move off this one. It's a weekly fair value gap. I have a feeling we might touch this one as well. Right, so I'm looking for bearishness. There's not confirmation of bearishness up here until we break this low, preferably this low where the money sign is. But then at that point, you're close to the TP areas. Okay, we go into this. Do we have any fair value gaps? There was one here between these 2 wicks. That's been closed above. We induced lower and came back up. Market doesn't want to go down yet. We have this supply zone. We don't actually have, let's go to the 1 hour. A local fair value gap is what I'm looking for right now. We've got this one, okay? This one over here. There's a fair value gap over here. Get this one out the way. The inverted one, right? Here's a fair value gap. We went above it, went to sell, didn't do it. Why? Because we haven't grabbed liquidity. Yeah, I put the EMAs on now. You'll see 50 EMA. Okay, I didn't need the fair value gap, but it can serve as a confluence, and a lot of people prefer to trade the fair value gap. I'm trying to show how these EMAs help. Okay, now by the way, we've got a shoulder, head, and a shoulder Market has broken below the 50 EMA. The 13 has crossed the 50 EMA. That's a market maker method signal to short this. Okay. Market went short, took out the demands over here, but did not take out this one over here. So this is still live. The one below it is still live because I am expecting price to get below this blue line and even the orange one over here. Okay, so we've not had any closes above the fair value gap, okay, but I wouldn't short it. We need to grab, this is the 50 MA. This was the first move above it. We did not, remember, we need to grab liquidity to the left. And if we don't grab liquidity to the left, then see this wick here? That's this push up, okay? We need to see price induce, grab it, and go lower. Break a structure there would be your entry. So we didn't grab liquidity when we went above the 50 EMA, okay? So now if you was only using the fair value gap, you'd see rejection, didn't close above it, came down, closed below, take the trade. But then look what price did, came straight back up to take you out, which it will come up a bit higher. It will take that high, okay? So those traders are gonna get taken out because there's all this liquidity, yeah. And mind you, I haven't done a proper analysis on audusd, and on the higher time frame, it is sideways, yeah. There is a chance it takes out this high, but I think the probabilities are higher for it to go down. And if I see that trapping, the grab of this there into the 200 EMA in the supply zone and a breakdown, excellent, short. If I see that and on the 4 hour we haven't closed above this and then we managed to come below, that's even stronger. Yeah, but I would have been in the trade already. Okay. So we know we wouldn't have took this trade because we haven't grabbed liquidity above the 50 EMA. We didn't do it with our move coming up. So push up there, come down, grab it and then drop, or take something on the left. We didn't take something on the left. I don't count this little thing. Okay. It's below our point of interest, supply zone and fair value gap. And it's just like the first bump in the road. So all of this looks mitigated, so it does look a bit, you know, like, you know, where is it actually going to drop from? But when we come to here, you can see we definitely have a fair value gap over here. The fair value gap over here, okay? This high we're expecting to take, and there's also a little fair value gap there and a little fair value gap over here. Let me draw that one. Okay, price is going to turn around after filling in an inefficiency. Could be a fair value gap. It can just be an imbalance. So there could be a wick on one side, no wick on the other side. That would be an imbalance. Or grabbing liquidity, okay, trend line. But what it does is it grabs liquidity whilst fulfilling a purpose, okay? It will grab liquidity and say mitigate this supply, or mitigate this supply, or fill in a fair value gap or an imbalance, yeah? So audusd, like I said, I'm short on audusd. I'm not going to get into the channels on this video because it's just, I don't want to do too much. But I will say, I anticipate price getting above the channel and falling back down after. That will get us above this EMA. Okay. Probably see this. You'll probably see this. Yeah. That will get us above that EMA, which we can manipulate, tap that fair value gap and drop. Or we literally tap this one and drop because we would have grabbed liquidity above the 50 EMA and the 200 EMA, tapped into the 800 and broke structure to the downside. And then again, you could use the close below here for your entry. I would have got in upon, say, a break of this over here. I'm going to run through some more examples because there's definitely going to be some better examples, and I really want people to get it. And we're going to start on a 4 hour time frame, and we're going to start with no indicators on the chart. Okay, there's no local fair value gaps. There was one here, it's been filled. There's one down there. We'll go to another chart. Okay, right, this should be fine. We had a fair value gap in here, so let's draw it out. Okay, we had a fair value gap down here, and we've got inverted daily fair value gap. No, it's not inverted. We have this daily fair value gap. Okay, it hasn't been inverted because it hasn't been closed below. Right, so ever since this fair value gap has been made, price hasn't gone below it. All right, this looks like an amazing sell, by the way. So we've got our fair value gap here. Okay, we've got one slightly higher over here, and we had this one over here that got inverted, and we've closed below it. So this on fair value gaps, if you had your directional bias, this inverted fair value gap would have been an entry market make, and sorry, ICT. But if you check to the left, just before that, they manipulated that because this tapped into this fair value gap, came lower, closed below it. You could have took that. You might have even got it down here or something, or even here. You might have added to it here. Don't know. Yeah, broke some demand, but it came up and took you out. I put the EMAs on. Okay, I haven't looked at this. I don't know what it's going to show me, but I'm going to look in now that it's on. All right. Right. Did we grab liquidity when we went above the 50 EMA? I'm on a 4-hour time frame. No, we didn't do it in this move. This high was left. In fact, they're equal highs there. Okay, so we wouldn't have took that trade. Yes, it closed below the 50 EMA and that, but there was no liquidity grab. Okay, and we didn't break the swing low. Price comes back up again. Now we've grabbed liquidity above the 50 EMA and we've come down. Okay, so this inverted fair value gap has been closed below again, inverted twice. This new fair value gap, okay, that was made when we did this, okay, we created that fair value gap, we closed below it, pulled back in and came down, yeah? So you could have caught this if you are, say, an ICT trader based on the fact that price came up. 6 o'clock is a decent time for trades. People don't really know that because it's not your kill zone or whatever. But 6 o'clock, just like I said earlier, is what I'm waiting for to potentially take another trade, right? So price has grabbed liquidity. When it came about the 50 EMA, it grabbed liquidity here and here. Cool. It gave us a fair value gap. We closed below it. You could have took the trade. At the same time, you will notice when we did that, we got our break and close below the 13 EMA. The 13 EMA was above the 50 at the time. If you wanted to wait for the 50, this would have been your entry. When we closed below the 50 on this candle, okay, stop loss would have been here, and bang, there's the entry there. On the TDI, you'll see that we went and closed below that 50 static. That's an extra confirmation for market maker methods. So EuroCAD is bearish to me. EuroCAD's target is this low to me, okay? And there is a chance that price will tap into here and go higher. But after this Elliott Wave count and everything, to me, Euro USD, minimum, bare minimum, prior fourth wave, this area. So you could look for a demand zone in this area, okay? All right, let's grab the low and went higher. That's the demand zone. You could take your trades to this demand zone, okay? If you're not certain that the low is going to break. We've got the 800 there as support as well, all right? On the other hand, I don't believe that this area is going to hold because of my Elliott Wave count while looking at it right now. I don't even remember what the rest of this looks like. Yeah, I'm likely to have markups on every single chart that's on my trading view. Yeah, so if I do have a deeper look, we've got a 1, 2, 3, 4, 5. After a 5 in Elliott Wave, you expect a reversal or a retracement. Okay, this is a support area this midline as a support area, backed up by the 800 on the daily time frame. And if you ask me, I think this is a good place to take your positions to. We also have a fair value gap here. We also got a fair value gap here. That would be cleaner on the, I think, the weekly. Yeah, there you go. Strong fair value gap on the weekly. That is going to be the most, you know, powerful level to take trades to and from. Okay, we got a weekly fair value gap here. We got some demand here, and let's get into the actual. Take the EMAs off again quickly. Go to the daily and clean up some of this. Okay, right. We have put the EMAs on actually. We have grabbed liquidity on the daily time frame above the 50 EMA. First move above the 50 EMA, okay, didn't grab nothing, pushed down, closed below the 50 EMA. But when it closed below the 50 EMA, it actually went below the 50 static, okay? It went below the 50 static, but it came up, okay? So that's good that you see that. It went below the 50 static. You can't just be like, okay, price came up above the 50 EMA and closed below the 50 static. It works a lot of the time, but like I said, you know, you would have got taken out here. No liquidity was grabbed. Yeah, this became liquidity. These equal highs were liquidity. We grabbed it. Now we're closing below the 50 static on the daily time frame. I believe that when this daily closes, this will be below the 50 static. So you can check that for yourself, EuroCAD on the 18th of November. Okay, this is clearly bearish to me. So I've seen this. I've got the direction on the higher time frame. Okay, we've grabbed liquidity above the 50 EMA, and this is on the daily. So I jumped down to the 4-hour time frame. Now I'm just looking for the opposing fair value gap, or the fair value gap, sorry, that's above us. Yeah, I'm not worried about this. As you can see, it's a supply zone. Okay, you can see this wick came up right now. Let's have a look, because it looks like these are some equal highs. This is at 62686 and this is at 62686. So I can't ignore that. There we've got equal highs inside the supply zone. And what else? Right where we've got a fair value gap. This would be the number one best entry that you can take, but there's no guarantee it comes there. Okay, we could go, we could, and we probably will. Okay, but somewhere in here, there's probably a fair value gap, and the market could come into there, make another low, and then come up here, and then continue lower. Okay, but we have that break and a close below this. Yeah, so there's a good chance that we don't see this area because we've got that. We got it on the 4-hour time frame. Okay, we did grab, by the way, you can see on a 4-hour time frame. Okay, we came below the 50 EMA, we came back up, grabbed liquidity above the 50 EMA, then we came down and closed below the 50 EMA. Yeah, then we came down and closed below. You can see, sorry, 50 static. We've gone way below it. Jump to the 1-hour time frame. We're looking for the first fair value gap that we could use for a trade. Here we go. First fair value gap. Okay, now you see the 13 and the 50, they're over here. We're on the hour. The hour time frame is the most key time frame to use this stuff on. Okay, so this is good to me. This is I like to see this. I just can't enter now. Yeah, I'm hoping 6 o'clock if I'm even looking at this, because I've got so many charts lined up right now. This is the immediate target. We'll probably take this target before we even do go back up. I strongly believe that we'll take out this low before we see this fair value gap. Okay. So what you could do is look for the opposing one and buy it up, but I wouldn't want to do that. I want to be in sells because I see a big drop coming for EuroCAD. So that's our fair value gap, and you will see as price comes up, the 13 will come into there, the 50 will most likely be down there as well. Okay, and then once you've got that, once you've got the 50 come down into here, okay, and then price is coming up, you want to see this induce, it gets above it, induce it, it comes and grabs it, there's your trade. Yeah, because the reason why I have this, that's what I'm looking for on this. I'm not looking for it to necessarily take liquidity to the left, but it could, because we have these equal highs. But uh, the thing about these equal highs is that we've got this supply zone here. We've got all the other confirmation. And so I wouldn't be surprised if I went on to say on Nanda or forex.com that those highs might not be equal. There you go. See, you check forex.com. This is at 626.90. Oh, they are equal highs. They are equal highs. But this does look even more impressive to go to the downside over here. They're equal highs, and there's a fair value gap just above. 50 EMA is sitting there currently. So this could be a trap. I'm not going to lie to you. I don't like to see equal highs above where I'm likely to enter. But to be honest with you, if I see the right thing, what I want to see here, I would take that short. I will take that short every day. You're just going to check on Nanda as well, just to see if they've got them as equal highs. 62692, and over here 62688. So on Ananda, we grabbed this high into the fair value gap. Yeah, this is why I'm telling you. See, so when I see, if I check these three broker feeds and they don't all line up, then I'm definitely to myself allowed to ignore that or take the chance and see. Yeah. Before I even knew that it had done this on Ananda, you already knew my stance on it because of the supply zone, because of what we did at the 50 EMA, because of the 50 static, and this was all on the 4-hour time frame. Yeah. So happy to take shorts at this fair value gap, providing I see what I want to see. Yeah, which would be the 13 EMA in here, which is definitely going to happen, and most likely the 50 EMA in here, because the 50 EMA has got the time and the space to get there. Okay, I want to see a trap in there because there's no liquidity in this leg, at least not on this time frame. Okay, no liquidity, so I need to see price come up, fake lower, come back up, take that the first mouse, the early sellers, and then come back down. Yeah, Euro USD and Euro CAD. Let's go to Euro GBP. Let's take off the indicators and let's have a look at what it's got here. Okay, the messiest charts. You'll see me with the messiest charts. Right, we've got fair value gap over here. You will see price came to it, respected it, and started to go lower. Okay, even got a little break over there. Okay, this looks corrective to me. What do we have up here? Supply zone and a bunch of highs. A bunch of relatively equal highs are over here as well. Okay, cool. What do I see in terms of market maker method? Because I'm pretty sure we've just closed below the 50 EMA. We're on the 1-hour time frame. There we go. Okay, this is distribution. Very similar to the other one though. This is what I see right now. Just so you know. Okay, because these are live charts, and if you see the video, you might want to use the ideas that I'm showing you now. Okay, demand was taken inside this fair value gap. Okay, what I'm trying to show you is different schools of thoughts line up with other schools of thoughts in different areas, and if you know them, then it's a stronger, higher confluence for you. Okay, now to me, this trade is ready to go down lower, but there is the chance that it could go up to these relative equal lows. But when we came up to the 50 MA, we created these relative equal highs. We induced lower, we came up, grabbed them, and closed below the 50 MA. That is a short to me every day. Okay, I will take that risk every day. Put the stop loss at this wick. Okay, if I'm wrong, cool, no problem. Price will most likely come up into this supply zone, do the same thing, and I'll take it from there. Okay, remember my risk to reward is going to be tight, so I might lose 4 pips, 3 pips, 8 pips, 10 pips, whatever. Yeah, but the big move will follow after if it's not right the first time. If it's right the first time, excellent. All right. For this, I'm looking for a close below this 50 static because I'm looking for price to take out this. In fact, take out the green line. Prior fourth wave is here. Okay. So if you was to be on the safe side, you jump out at this demand here. Okay. Or maybe after taking this wick low. This looks like it's ready. I think 6 o'clock might be the best time to take this trade, but this looks like it's jumping the gun a bit. So I checked the 50 static. We got the close below the 50 static. We got close below the 50 MA. We grabbed liquidity above it. We did it at a fair value gap. We've broken structure. That's a short. I will be taking this most likely soon. Um, let's look at one more quickly. Okay. We'll start on the 4-hour time frame. This is Euro CHF. Okay. I will plan the next video. I haven't planned this. And we'll go into deeper detail. Okay. And we'll make this clearer. Well, and I don't want to see, I get a bias every time because I see I've counted this as 1. So to me, this WXY is potentially a 2. And this is 1, 2, 3, 4, 5. This is actually going to chuck it down. Let's go to the daily time frame quickly. So you do always want to have a bias, right? To me, this is an ending diagonal. 1, 2, 3, 4, 5. Very choppy. Okay, so I could be wrong here. I think I'm wrong here. I think we may have, right, there is a chance we slap the low one more time and then go higher. But to be honest with you, looking at this, there's a strong chance this is completed and we're bullish now. And the first target would be this trend line. Okay, that's your big higher time frame liquidity. I'm just gonna work it out now instead of guessing because somebody might want to take this trade. Okay, we got bullish divergence on the daily. That's not easy to get. Yeah, that low, this low, this low is higher than this low. Over here, the low is lower. Yeah, so basically, when we made a lower low, this made a higher low. That's bullish divergence. This goes downwards, this goes upwards. That's a strong indication of buys. Yeah, I'm bullish on this, by the way, just to make it clear. Yeah, that 1 is a higher degree 1. That 1 is, there's a 1 and then a 2 over here, and then a 1. In fact, I'd even think it's ABC, but it's irrelevant. We've finished a structure here. I've got more than enough evidence to suggest we finished the structure here. I'm looking for buys. We jump on the 4-hour time frame. Okay, we're on the 4-hour time frame. Price is clearly going up. 50 minutes left of the 4-hour time frame. There's a good chance price closes above the 50 MA and look above the 50 static. If it does that, I'm bullish. Okay, I'm bullish anyway, but that would be a confirmation. All right, so now we're looking about, I'm doing it this way so that you know about fair value gaps. I haven't even shown you how to know one fair value gap isn't going to work over another because I haven't seen that yet. Okay, but I will do a proper structured video, and I'll make sure you get all of the source. I'll make sure you fully understand how to take these positions, okay? So this came down, broke the 50 EMA, 13 EMA in that cross, and we've come back. And if we close above the 50 EMA on the 4 hour time frame with big, strong, bullish divergences, yeah, which we saw in the daily, okay, over here, obviously it's going to be more impressionable. But we go from, sorry, my computer's playing games. Let's just get off the TDI for now. I think I've got too many things running in the background. Why has it just done this? Right, cool. Let's just jump onto the 1 hour time frame and look for, all right, God knows when I drew this, but I have a fair value gap here. I have a fair value gap here. There's one right here. Okay. They are my points of interest. Why are these ones my point of interest? And I'm not going to take it because it could make one here. I'm not going to take that into consideration. One, because it's way at the highs. Two, and most importantly, on that 1 hour time frame, the EMAs are below. I expect price to see these EMAs, okay? Market maker method, you'd go shoulder, head, shoulder, or you'd go W formation, break across the 50 EMA, 13 crosses the 50 EMA. We are bullish. We just want price to come back to the 50 EMA, trap at the 50 EMA, and then we would buy it. That lines up with this fair value gap. Okay, don't get twisted. If price just went higher, 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 then this would be of a better interest, or maybe this one that could be formed here could be the one of interest. Okay, but the likelihood is, I'm just gonna give you a brief something about channels because I need to put it on here right now. And so basically, Elliott Wave, when you start a structure, yeah, from a low, from a high, okay, you get a 1, you get a 2. At the moment, you don't know if it's a 1 or a 2. It could be an A and a B, okay? Just simply put, if price breaks and closes and continues above here, is much higher probability it's a 3 than a ABC, because corrective structures generally stay inside the channel, yeah? They can come up and give us wicks here and that, but you know, when you got consistent body closes above, you're in a 3. We also use the Fibonacci extension from the 1 or A to the B or 2, okay? And like I said earlier, 1 to the 1, 2, 3, 6 area is common for, you know, A, B, C, yeah? 5, 3, 5. But 1618 can be reached, but it's rare. The moment we hit 1618, we're most likely in a 3, okay? Much more likely in a 3. This old channel line could be used as well because it's local to price. But anyway, fair value gap here, 800 EMA there. High interest to me. Plus, we get to manipulate the channel. The channel high. So price, in other words, what I'm saying is price is likely to do something like this. That's the short. Okay. Fair value gap over there. Okay. We have a supply zone here as well. Okay. If this is a 3, we'll get to this area. We'll come back in a 4 and continue higher. And just quickly to another confluence to help people, yeah. If we do get to that 1618, yeah, or this area, or close above this fair value gap, okay, let's say price got to the 1618. If price then comes down and touches the 0.618, then it's not a 1, 2, 3, 4, look for a 5. Okay, the moment this 618 is hit, so it'll be drawn from the beginning of what you think 2 is, okay, to the end of this. So wherever this ends, yeah, assuming it's here, price comes down and hits the 618. That's not a fourth wave anymore. So that tells you that this stuff, whatever happened here, was higher probability corrective and we're coming down. Because remember I told you could tap the 618 in a corrective structure as well. But by then we would be way out the channel. So yeah. Now, like I said, I'm actually bullish on Euro Chef. Okay. So This will tell me a lot, okay? And like I said, when I put the fibs on there, if that's the case, I'll be looking for a fourth wave, then a fifth wave. Yeah, so I would like to buy that fourth wave. I know that 618 that I've just taken off my chart would be my stop loss already. I know that already. So if we don't, if it was to curl down here, move down, it doesn't mean we're bearish. It just means that this could be 1 2 1 2, or this could be a corrective, the start of a bigger corrective structure that's going higher. All right, but like I said, I'm bullish. My things are there, fair value gaps, and I've got my EMAs there. I need to see price trap at one of those EMAs in one of those fair value gaps, and then break structure the upside, and that's a buy for me. I would come back later or tomorrow after I've planned the proper video, and we'll get into the details of this a lot more. But I just want people to realize that you can put your 50 EMA and your 13 EMA on your charts, okay? I would have the 800 and the 200 on there as well, because as you can see even here, that serves as a point that we can see price shorting from. It's in a confluence with the fair value gap as well. Yeah, these things add confluence to your trades, okay? Help you take better trades. So thanks a lot. Please like, share, comment, subscribe, and let me know if there's any type of videos that you'd like me to do and break down, and I'll speak to you again in a bit. All right, peace.